Alright guys, so I hope you're doing fine as always. Today I'm making another video about this 5-hour long setup on Solana. I did record my chart live when looking for this setup, so without further ado, let's jump straight into the video. Alright, so now for the actual TA part of the video. I'm here on the Solana chart on the 1-hour time frame. So I'm just looking at the 1-hour time frame, scrolling down a little bit. What we see, or what we notice here really, is we had this strong move down into these vector candles. So the recovery move has been done and we see an impulse up from there. From the impulse we see a small retracement, another move up, and then the continuation move down, which, similar to the last time I explained harmonics, this screams harmonic patterns. So we take our fib from this low all the way to the high, so our initial impulse move up. In harmonics you can call this the XA move. What we notice here is we're really close to the 0.886 and the retracement is goes through the 0.382. So with some info about harmonics, this might be a potential bet setup or a bet pattern. So I'm taking my harmonics tool right here to draw it out. The point for the bet pattern is on the 0.886. So just aligning these numbers on my 0.886 level. So I'm expecting price to hit this to then show some type of reaction. Now we need to double check the C level. So the A and D level are fine, or A, B, and D level are fine. For the C level, for this bet pattern, it needs to be in between the 382 and the 886. So as we can see here, we're sitting nicely in between it. So this is a valid bet pattern, a valid harmonic setup on the 1-hour time frame. So now we move down the time frame. I'm looking here in this area around our 886 for vector candles, if we have any recoveries left to the downside. As you know, I value vectors higher than harmonics, but there's no vectors there, only on the 1-hour time frame. But remember what I usually say about vector candles. If we have a vector on the higher time frames, but on the lower time frames there are no vectors inside, then these aren't really strong vector candles. So keep that in mind. We didn't have vectors on a smaller time frame, so I'm not taking this vector candle too much into account. Drawing my fib again for my long tool so I can see the entry better. I decide to enter exactly on the 886 level, as this is the theoretical level for the bet pattern. We need some wiggle room. You can always slip a little bit more downside or to the top side. That's the risk. I decide to take my entry exactly on the 886 here. Stop loss we will come back to in a bit. TP I'm looking for, or I'm looking at this vector candle right here and this high. So I expect them to sweep this high again and recover this vector candle. Usually for harmonics, I'm more interested in the B level, so this level right here, which is also a vector candle right here left unrecovered, and a good liquidity sweep, because we have 3 tops here. So on normal days, or usually I would target this area right here. Reasoning, I'm looking for the first vector candle and a small liquidity sweep is because I took this trade on May 6th. This is 1 day before the FOMC meeting. So I did want this trade to close rather quickly, as I didn't want to hold this trade onto May 7th, because then was the FOMC meeting, so I wanted this trade to be closed before the FOMC, just because during FOMC we can have some nasty wicks to either the top side or the bottom side. It's hard to predict, so I wanted to be out of the trade before the FOMC. Usually I would be looking around this B level and probably look at this vector candle with this liquidity sweep. So now checking on the smaller time frames if the TP still makes sense there. So also a sweep there and into the vector, which is pretty much or almost fully recovered already. Stop loss wise, as we know, there's no vector, so what's standing out here is these two wicks. So they might be willing to sweep these wicks right here, these two wicks. So I need to be sure my stop loss is definitely below these two wicks. Price can find some support or find some support there as well. So I definitely want my stop loss below these two wicks. You could consider having your stop loss below the big wick, the X level, which is valid, but then you probably need to look for your TP higher up towards this B level or even higher. As I'm looking for a closer TP, I want my stop loss to be tighter as well, so the trade is still worth my while and worth the risk. Checking it as well on the 5-minute time frames, I think here. So no vector on the 5-minute time frames, but we do have this fair value gap right there. So that's also pretty interesting. We do have the liquidity sweep still. Stop loss wise, we already know no vectors, same wicks there, so we need our stop loss below the red line. That's what I'm doing here. As I want some wiggle room, I decide to put my stop loss on exactly a 5R setup. Alright, so now what can we tell about this trade in hindsight? So first of all, the screenshot of the trade, entry at 141.76, 141.76, TP 145.810, 145.810, resulting into a 108.5% ROI on 38x leverage. Most importantly for us, it's a 5R trading setup. So now, what can we tell about this trade in hindsight? We did get our entry here with a vector candle. We can see we did wick to the red line that we drew, where we wanted our stop loss to be underneath. So it did find support again on this wick. On the lower time frames, we can see we have a few wicks there, so price did find some support there again. TP wise, we can see we went close, had a small rejection of the EMA, small retrace, might even be a fib retracement. We can have a quick check. Somewhat in 382 to the 05-ish. Nevertheless, bounced off it again, got our TP. We can see here, if we did target our B level or this vector candle above this top liquidity, we would also have a fill. This would result into an 8R or maybe a tighter stop loss, also a 5R, I don't know. But the zone that we would usually look for our TP also got hit before we had the FOMC meeting. That's tough luck, it happens. I'd rather be safe than sorry, so I did look for a closer TP, as I didn't want to hold the trade into the evening of FOMC. But That's up to you. If you like risky trades, you can do it before big news events. I usually keep them somewhat into account in my trading, that I don't have too many trades open or that I'm not exposed to too much risk right before big news events. So that's pretty much everything to this trade. As always, if there are any more questions, please feel free to leave them in the comment section or on the Discord server, and I will catch you guys in the next one. Take care, see ya, bye bye.